Don't ask them, what do we know? What I forgot is better than whatever they remember.
Welcome back to Delta Code. I am Delta, a seasoned economist with 20 years of investment experience in both traditional finance and crypto. And today I'll be discussing an option strategy for a company known as Alibaba, ticker symbol BABA. This is a Chinese tech company, one of the biggest Chinese companies that is been beaten over the head due to the Chinese regulations. And it is trading at very low PE ratio. This is price to earning. Right now, it is about 8 to 13, depending when you look at it. This is in a very low range for this company. Obviously, this investment comes with risks of what the Chinese government will do. The Chinese Communist Party, CCP, has been very hostile to their native tech industry, and most of their tech companies that should be competing with Western tech companies are actually losing out on huge market share because of their government's actions. Now, I am not a fan of communist or state-run enterprises. Historically, they always fail. A great example of this is when the Berlin Wall fell and the communist side of Germany wanted to know how they decided how much bread to bake in the West. They said, we just let the bakers figure that out. They know their business better than the government. Each day, they decide how much bread to bake based on their expertise in the baking industry. Government cannot decide and tell a baker how much bread to bake. They're going to fail at that. So the Chinese government trying to regulate the tech industry in China and failing at a lot of other regulations like their real estate is just evidence that the communist system has its flaws. That being said, I do believe that the Chinese society and its rich history is intelligent enough and smart enough to figure out that their current way of doing things when it comes to their stock market, especially their tech industry, is not working out, and they will turn it around. Recently, we saw Jack Ma, the CEO of Alibaba, come back into the fold and buy $200 million of shares. The company has been doing a stock buyback as well at historically low prices. Alibaba is trading in the range it IPO'd at, 10, 15 years ago. Since then, it's grown their revenue 20x. So this is ridiculous valuation for one of the biggest companies in China. They have a really strong cloud compute value proposition. And let's take a look at their metrics before I share with you my options strategy for how to invest in this. So this is Alibaba's stats. This is one of the things I like to look at before I invest in a company or when I'm researching. Market cap, 180 billion. Their forward PE is 7.8. This is really low if you look at historically low. Now, one of the metrics I really like to look at is PEG ratio, PEG ratio. This is the price to earnings growth. Anything that is 1 or below is considered a great value because the growth justifies the price. It used to be as much as 2, which someone would consider overvalued back when the PE was high. So this is a really low PEG ratio, and this is one of the metrics I love to look at when considering an investment, especially in a tech company. Their profit margin is about 11%, 12% for their operating margin. Their return on equity is about 8%. The revenue is 927 billion. Their quarterly revenue growth is only 5. We're looking for this to improve. And the quarterly earnings growth has gone south a bit. They have 614 billion in cash. Their debt is 200 billion. So they have a healthy balance sheet. And it's only shorted by 2%. So great financials, one of the best companies in China. Now, when considering investing via options, in this case, call options that are attempting to gain a leverage on the upside, we must be careful and look at this investment from a lens of positive expected value. This is a bit of a gambling term. When you play a poker hand, you want to calculate what are the odds of you winning and what is the expected value. If you do this over and over, will you come up ahead or will you lose? When investing via call options, you don't always have to be right, and nobody is right all the time. Traditionally, 75% of options expire worthless. That means you're only right 25% of the time if you buy an option. So assuming that we will be only right 25% of the time, not any better, not any worse than the average. Let's hope we're better than the average, but let's just assume we're average. That means that we need to make such a big gain when we are right that it makes up for all the losses when we are wrong. Now, this is a options modeling spreadsheet that I make each time I am considering and researching investing in a call option or a put option. I mostly do call options because I am better at betting on the upside as an optimist. Seeing the pessimism hasn't worked out well for me. I am not a pessimistic guy, so I can't have a lot of conviction to bet big on something going south. And I believe in people and their will and want to survive, and even companies. So even though they may be in trouble in the future, I trust that most people want to keep their job, they want to keep their company going, and they will persevere and find a way. That's just my way of looking at the world. So I tend to bet on the upside. In this case, I want to bet that the price of Alibaba shares will be above $104 or $108 either by end of March of next year, 2025, or by January of 2026. This gives me 363 days or 664 days to have this come true. The price of a single call option is either $4 a share or about $8 a share, which means one call option costs about $400 to $800. If I buy 10 of these, the total cost is going to be $4,000, 10 of these about $8,000. My plan is to buy both, 10 of each, which will total to about $12,300. With this expectation that if I am totally wrong, I will lose $12,000. If I am right, even slightly, then there is solid upside. If the price of Alibaba shares goes up, as you can see here in orange, by 10%, which is an increase of $7 to the price of 80, then the 2025 call option will have a profit of $2,500, and the 2026 option will have a profit of $3,500. If this happens sometimes soon, this will be about 50% increase or gain. So if you were to purchase the stock, you would make 10%. If you purchase the option, you will make 50%. This is why I like options. When you feel like there is a mispricing in the market, in this case, this company seems undervalued from the statistics I look at, and I expect the market to recognize this within a year or two at some point, or the company to turn around their growth, at which point they'll have multiple expansion and they won't be valued at seven times forward earnings, maybe 15 or 20 or 50 or 100 like other tech companies, then these numbers are very realistic. 100% gain would mean the company goes from $70 now to about $150. At that point, this $4,000 investment here will be in profit by $50,000, the other one as well, which means that if I'm investing a total of $12,000, my total profit will be about $107,000 or 870%. This is what I'm actually looking for the stock to double and for my 12,000 to basically 10x. Upside that is not as likely is the shares 3x from 70 to 210. This is for the 2026 call option, which is giving us more time for this to come true. Then just this one will be worth $100,000. So even if I'm wrong on this one and kind of trades sideways until past March of next year, but then starts picking up in 2025, by the end of 2025, start of 2026, if the stock has doubled or tripled, then we'll still make our desired 10x. Now, whenever I make a options modeling sheet like this, where I put in the prices that the options will be worth at every price level, I also like to put in the Greeks that are currently available at your options trading platform and what those Greeks mean. You have your delta, gamma, theta, vega, IV, or also known as sigma. Each one of these tells you something about the option, about how the price will change if the underlying asset, which is in this case Alibaba stock, prices change. The most important to me is delta. I wonder why. What delta represents is the rate of change between the option's price and a $1 change in the underlying asset's price. In other words, the sensitivity of the options relative to the underlying. So in this case, if Alibaba shares of the Baba stock goes up $1, then this call option that I will pay $4,000 for will go up by $300. The $8,000 one, which is 10 calls, will go up by $420. So this is what I expect for each dollar change in the stock price. Another one that is they're all really important, but I want to be really mindful of if you are new to options, is theta. Theta is also known as time decay. This is how much each day the value of these options is lost. And this changes and increases closer you are to the expiry date. Closer you are, more this increases and faster the increase, where it becomes exponential, where you're losing a lot of value in your options closer you are to the expiry, as if the price is not in the money or worth more than the contract price. I will make this spreadsheet publicly available. I'll put it in the description below. Help yourself. If this is your first time being introduced to derivatives and options, I suggest you do not follow this. You do not buy any of this. This is really risky, and you just follow along. If you're using something like Robinhood or another platform, you can just put it on your watch list and see what happens. There'll be always opportunities for you to put in actual money and do this again. Opportunities like this come along all the time. For me, it's a few times a year. I don't have ideas like this all the time, but a few times a year, I'll have an idea where I'll put in a good amount of money, make a bet like this. If I am wrong, I am absolutely willing to lose $12,000 on this strategy. Because if I make 10 of these plays, right, and I am right, I'm correct once, I make all the losses back. If I'm right twice, I've doubled my money. Being right twice, that's 20%, 2 out of 10. If options, people are right 25% of the time, that means I am really taking a conservative side of this and betting on some insights of my investment experience and knowledge and analysis. And hopefully I can be correct 2 out of 10 times, which is plenty to double my money. And that is all I'm looking for. If you're not willing to lose your money 100%, don't invest in options. You can just buy shares of Alibaba and, you can make 100% if they double, which I think they have a good chance of doing. So, and if they don't, they'll likely won't go to zero because this company has a lot of cash on hand. They have a great business. They're one of the biggest producers in China, their biggest cloud computing platform. So there's a lot going for this company. The biggest downside in investing in options is time decay. You have to be right within the contract time period before the contract expires, at which time you have to be right. These shares of Alibaba have to be over $100 plus the price of the option I'm paying here. So for the 2025, the shares need to be over $104 for this to be profitable. Now that is that's about a 50% growth in the stock for me to break even. That's a big if. I need it to go up 50% for me to break even. Now, that's in the time period. If it goes up only 10% in relatively short period of time, because the option contract has time premium value on it, I can sell the contract for a gain. You don't have to wait until the contract expires. You can sell the option to somebody else who's willing to pay for it. In options, you win some, you lose some, and hopefully you win enough to make up for all your losers and then some. Here is a point of view from CEO of UFC, Dana White, talking to Lex Fridman about gambling. Investing is a lot like gambling. If you lose, you have to have the fortitude to go back out there and try again. And if this is emotionally daunting for you, then maybe it's not for you. There are easier ways to invest, less volatile, less risky. Buying something like an index fund is a perfectly fine way to preserve wealth and build it over time in a safe, low risk, low thought way. It's kind of a set it and forget it. And I recommend this to 99% of the people. If you are looking to take on extra risk, please do it with a small portion of your portfolio and be mindful of positive expected returns. And here's Dana White's perspective on gambling, which investing can seem like it is a lot of times, and it's very similar. And I don't try to downplay it. This is a form of gambling, and that's how I look at it. I look at positive expected values.
It's business or whatever. There's going to be wins and there's going to be losses. And you have to take them both in stride. And you have to be able to, there's a lot of people, when you gamble, right, and you lose and you go into a deep, dark depression. I've seen this with guys that do it. Get depressed. And gambling isn't for you. If you are the type of person that's on social media and people say horrible things to you and you get depressed and you shouldn't be on social media. You know what I mean? These are all part of being in the game. When you're in the fucking game, great things happen and really bad things happen. And you got to take it all in stride. And you got to pick yourself up the next day, strap your fucking shoes back on and get out there and go to fucking war again. That's how it works.
That's some Goggins shit right there. All right.
Hopefully, I'll put you on game. This is how I play the game. Now, I'll look at it as gambling, much like Dana White. I have built a resilient mental fortitude and emotional fortitude when it comes to investing. Seeing my portfolio go down 70% because I'm involved in crypto, I can stomach that. Doing something like options, you may experience similar losses, even 100% if they expire. If you cannot stomach this, maybe this is not for you. If it is, and you do lose, understand that it's part of the game. It's positive expected value. You win some, you lose some. Hopefully your winners are so asymmetric, where in this case, I am expecting to lose 12,000. but I'm expecting to also win 100 to 200,000. I just need to be right a few times. Let me know what you think about my thought process. If you are enjoying learning of how I invest in options and sharing with you my literal model, my option strategy builder. Let me know what you think about Alibaba, Chinese tech sector. I love the wisdom of crowds, and together we are all smarter. Thank you for tuning in today. Please like and subscribe to the channel. As always, may the force and power of compound interest be with you. Peace.